What's up, flow traders? Okay, so today we're going to look at the flow index, understanding it, the basics, and how we use it. And once again, this is part of our training series, and it will be very short, sweet, and to the point. So when we're looking at the flow trade application here, we see two things. We see a line and we see price. The line is what we call the flow index. It is looking at the buying and the selling of the market makers and the large institutions, the people that can actually drive price. So price moves when the exchange gets an imbalance of buys or sells, right? So the exchange is getting orders all the time. When more buys than sells come in, price goes up. When more sells than buys come in, price goes down. And only certain people have the money, essentially, are able to create orders large enough to create that imbalance. And the flow index is tracking the buying and the selling of those large institutions, the people that are actually able to create that imbalance and drive price. So it's really important to kind of understand what's going on underneath the hood, essentially, understand what big money is doing, and it can help us out a lot in our trades. So how do we use it? So there's three things that we use it for. There's three main strategies. There's confirmation, continuation, and divergence. So confirmation is when you want to get into a trade, we see if the flow index is in the direction of your trade. If it is, you get confirmation to go up. If it's again, or to go in your direction, I should say. If the flow index is going against you, there is no confirmation, and you do not get into the trade, essentially. That's kind of how we use it. So let's take a look at a case of no confirmation. So let's look at Tesla here. We see there's a resistance level here, right? We reject resistance, and then here we technically rejected that resistance for a second, right? It looked like it was essentially going to kind of triple top here. So let's take a look at the flow index. We reject, we kind of start to sell a little bit, we bottom out, the flow index starts to buy. Right as we hit this resistance, we see the flow index made a new higher high. So if you were looking to short here, confirmation was violated, so we would not take this short, even though we were rejecting a clear resistance point that rejected multiple times. The flow index was buying, market makers were buying, confirmation failed, do not get into the trade. The next thing we can look at is confirmation to get in the trade, right? When confirmation works. So here we see, the flow index kept buying, boom, it topped out, and it kind of starts to sell here. We see this double top coming in, and it starts to make lows. So, I can just tell by looking at this is a very classic Fibonacci move. We move down, we hit our Fibonacci retracement, and we move down. So we see the double top on the flow index. You'll notice those, very common patterns on the flow index. We see the double top come in, lower high, lower low, boom. We get confirmation right here, and we can take our trade down to our Fibonacci extension target or whatever target you want to use for this. But essentially, we get confirmation here. So here, looking to short, there's no confirmation. Even though we're rejecting resistance, the flow index is buying, market makers are buying, they still want to push, they push, flow index starts to sell, we see a double top, lower high, lower low, boom, confirmation comes in, we take our trade. And the next is continuation. So let's say, you got a little aggressive and you got in your short somewhere around here and you're wondering when to get out. So we use continuation to say, as long as the flow index is still in my direction, I know I don't have to get out of my trade. So flow index is selling, I can stay in. There's this little pullback here. A lot of people get shook out with these little noisy candles, right? We pull back, flow index is still selling, I can stay confident, I can stay in. And then once we see the flow index start to level off here, that's when continuation is broken and we know to get out of our trade. Very similar. If we were to get in, somewhere around here for the long, let's say you got long on this resistance break up here, well, we basically had continuation into the close and into the gap up in the morning. So that's confirmation, continuation, and the next is divergence, and divergence is what we call free money, flow trade, and divergence is when price and the flow index are going in opposite directions. So we see price going up, flow index going down. What does this mean? This means that market makers are selling the run or buying the dip if it's the other direction, right? And price is always going to come back down to the divergence point. Some of us use different divergence targets. I like to go a candle and a half up. So my divergence target would have been here. Some people cut the first candle in half, so it would have been around here. But regardless, price will come back down to the point where the flow index and price started to diverge. And it's a little bit different on the 1 and 15 minute. I'll get into that in the later videos. But now if you're just starting out with us, we really encourage you to just start looking and spotting divergence. Trading divergence is a skill. It's not always just you see divergence coming and just randomly get in, right? There's a strategy to it that we will get into later, but start to notice it, right? Start to notice when divergence happens. Start to notice, like, okay, I want to get in this trade here. Am I getting confirmation or am I not getting confirmation? Also, when you get into a trade, you can use the flow index to give you continuation to tell you when it's time to get out. So those are the 3 main ways we use the flow index, and thank you for joining me.